So you always wanted to start trading, right? But you never know where to start. Well, let me get you started on fair value gaps. So first of all, we got to know what an efficiency is within the market, right? An efficiency is basically when the market moves way too fast and leaves a gap within candles. That gives us a fair value gap. Now, how do you identify a fair value gap? Well, right here you have 3 candles, right? And you see that there is a gap between them. So that right here is a fair value gap. If we show it within a line, well, you see that the market moves super quick right here, right? And then bam, we make a fair value gap right here, and boom, tap back into it, and then go a bit higher. So what is the job of a fair value gap? A fair value gap's job is essentially, bam, creating the inefficiency, right? And then boom, going back into it, and then continuing its course, just like we saw right here. Now let's go over some small example of what a fair value gap is as a whole on the actual chart. So right here, we have a fairly good example. What do we see right here? Well, we see that we have a gap between 3 candles, creating the inefficiency or the fair value gap. And what happens? Price moves a bit higher, right? Boom, taps back into it, and then continue its course. That is what the fair value gap job is. It's to go back into and then continue its course to the upside. Now, the higher the time frame, the better it is. As you can see right here, we have a 15-minute fair value gap with the 15-minute time frame, right? The fair value gap is between these 3 candles, and boom, we tap into it once right here. We reverse, right? We continue to the downside, and we tap into that one, and then we're continuing to the downside again. Now you may look and see like, oh well, we have another gap right here. Is this also a fair value gap? Yes, it is, but it failed, but it is still a fair value gap as a whole. You can also see right here that we have another fair value gap that held twice right here, right? We have the fair value gap right here, the 3 candle sequence, tapped into it or continued, tapped into it right here and continued. Now that was the 15-minute time frame, but what about the other ones such as the 30-minute, the hourly, the weekly, the monthly, and so on and so on? Do the fair value gap works on these time frames as well? Short answer is yes. I mean, let's look at it real fast here, right? We're looking at it at the monthly. Of course, you're going to have way less on the monthly, but right here you have a fair value gap, right? Bam, 3 candle sequence. What happened? We went back into the fair value gap in the middle of it, and then continue our course to the upside right there. Now, you may notice, okay, but we have another one right here, which you are right. We have another small one right there, right? If we do something like this, and what happens to it? Fair value gap, price continues up, blah, 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 right? Then we dip back into it and then continue our course to the upside. And mind you, this is on the monthly time frame. Now let's look at the weekly. Beforehand, we had the monthly, but right here, bam, we have one. What happens? Fair value gap, tap into it, continue, tap into it, continue, tap into it, and continue. And it goes on and on and on. Right here, you can see that we have another one just right here. Bam, tap into it, continue, and so on and so on. Same right here. We've just hit one just right now, tapping into it, and then we're continuing to the upside. So every time frame works. Let me just do you an example on the, I don't know, the daily. Just why not? Now you can see right here, we are on the daily. We're going to take the most obvious one, of course, but we have one right here. And as you can see, multiple times we go back into it, and then bam. And if you go on the weekly, it's going to be roughly the same right here, right? Roughly the same. Tap into it, go back up. Now we need to choose the good ones. So let me explain to you how we're going to find the good ones. So on the higher time frame, you want to have a fair value gap that has not been touched yet, such as this one right here, which is super, super, super low. We call this an unfilled fair value gap. So right here, we have an unfilled fair value gap on the weekly that is most likely going to get filled, especially with what's going on right now, but most likely going to get filled. Now we're on the daily time frame. You can kind of see that it correlates with the weekly right here, where we have one right there. We also have a smaller one right here. It correlates and it is unfilled, so good fair value gap. Now let's drop to the 15 minutes right here. You can quite see right here that we had an unfilled bearish 15-minute fair value gap. We filled it and then we moved lower before continuing higher, but we filled it and moved lower, right? It was unfilled. Now, what happened on this one right here? We had a bullish fair value gap that was unfilled, move into it, and then continued our course to the upside. Same for right here. We had an unfilled 15-minute bearish fair value gap right here, filled it, and moved to the downside, right? So unfilled, meaning they have not been touched. These are the best ones for your buck. Now you may see right here, well, okay, well, right there, it disrespected it and we went higher. Why is that? Well, that is an inverse fair value gap, so iFVGs, and this is the whole model that I personally trade. So if you want to trade with me and learn it, all the links are going to be in the description. Hope you enjoyed the small explanation on fair value gaps.